good afternoon. You're watching Closing Trades on ET now. I'm Anisha Jain. With me is Aisha Faridi. And for now, the market is looking in fine fettle. We are staring at a gain of almost 1% on the Sensex. So from the lows of the days, we have recovered quite a bit. And look at the Nifty as well, very close to the day's high, 24,300 thereabouts is what we are tracking. However, it's important to put the spotlight on the money market as well because rupee has weakened further. In fact, we are very dangerously close to the level of around 84 rupees to the dollar. So we are around 84.96, 84.97 thereabouts at the bottom of your screen, and just headed towards that 84 mark as far as the money market is concerned. So watching out for that as well. Sectorally speaking, just wanted to put the spotlight on what's happening in terms of the public sector entities. So oil and gas space is fairly active. Take a look at ONGC, up almost 8% in the trading session. Yes, results were positive. Brokerages have also given a thumbs up. And Street still believes there's more upside despite the re-rating that the stock has already seen. So that's sitting with good gains. Oil India too is in focus. It's given up, I think, a bit of its gain, but nonetheless, there is solid 7% move on that one as well. Pretty much, holding on to those gains at this point of time. Coal India, that is up 5 to 6% in the trading session right now. You also have other names like Power Grid, which is up 3%, and then a couple of these Adani group of companies, Adani Enterprises, Adani Ports is in focus. Curious case as to why IndusInd Bank is down. It's down 2.7%. Not that maybe I missed some news flow there, but I don't read anything specific with respect to IndusInd Bank, but that is trending lower at the moment. And from the broader market, one needs to be watchful of a lot of result reactions. I mean, Aisha, take a look at Cummins, up almost 10% off the day's lows. Zomato continues to be in a great run at the moment, and PB Fintech and ABB India too in focus just around their earnings.
Oh yeah, absolutely. I can spot BHEL as well. ABB, like you rightly mentioned, it's holding up a good over 6% right now. But the clear star performer today has got to be ONGC along with Coal India. Like we just flagged off, ONGC, couple of brokerage upgrades. Analysts are saying that the management has reiterated its guidance of ramping up the KG basin production from the third quarter onwards. And look at that, CLSA has got an outperform rating with the target price of 330 on ONGC. Investec, buy, target price 350, and Jefferies has got the most bullish price target on the street, that of 410 on ONGC. Climbing up higher as we speak right now, a good 7.25% move. Bunch of other names which are also in focus. NCC as well came out with its numbers. A very strong, quarterly performance, a good 23% year-on-year revenue growth in the first quarter despite of election-related disruptions. A very robust order book. Currently standing at about 52,600 odd crore rupees. Most analysts on the street believe that it's well placed to deliver an over 15% revenue CAGR over FY24 to 27. So NCC is the stock that I'm talking about. That will also come up for you on your screens. And then, of course, there's Krishna Diagnostics. That came out with its numbers. Bharti Hexacom, wherein Ambit maintains an outperformance. Target price of 1580 thereabouts in the stock. That also scaling up higher to the high point of the day, a good 3% of attraction coming in. But let's welcome on board our experts and figure out what is it that they've made of the Monday meltdown and the recovery in the markets thereof. Kunal, hi, afternoon. Made it back to 24,300. What next now?
Yeah, I think it's a good bounce back for the indices. We are back again even from an intraday basis. I think we were at one point, the Bank Nifty was almost negative, and for the index to come back towards 300, 350 plus, and that too on the back of very small recoveries for many of the banking names, or rather good participation across many banking stocks rather than just one or two names which are performing very strongly. I think that's a sign that maybe the markets are looking at a base building formation over here. So 24,000 levels or slightly below those levels where we had gone through a double test of a support, that remains to be now a strong support for the index. 24,500 still is a major resistance for the short-term trades on the index. And from the Bank Nifty front, I would believe 51,500 mark, which is also one of the crucial swing resistances for the index. That remains to be a key level on the upside. So we'll play on to this bounce back for the indices over the next couple of days. But I think the bigger trend could emerge once these key resistance levels are crossed.
Watching out for those key resistance levels. But Devang, let's welcome you on board and discuss what's happening in the industrial space. A few days ago, after the entire meltdown per se of the market started, there were brokerages that came out with downgrades on the entire capital goods sector, saying that momentum plays are going to get undone. They are getting very expensive. But take a look at Cummins today, post the commentary coming in on the con call. That stock is up 7%. ABB India, just ahead of its earnings, is also fairly excited. What do you make of some of these industrials' name? Is it better to take some profits off the table, or they still continue to be good buying opportunities?
Thanks for having me on the show, Anisha. I think we have clearly been very vocal on the so-called the industrials slash capital goods slash power, energy automation. These are type of companies, these are themes which are probably getting from more cyclicality to now a more structural play. So yes, if somebody says that these stocks have run up, these businesses have run up over the past 2-3 years, they have. But whether the earnings of these companies have caught pace with what has happened on the stock price front, I think yes. More so, a lot of these companies have their order book full. They have developed the execution capabilities very well. The margins are tending to improve for a lot of these businesses. And one thing is extremely sure that when you talk to the management of this companies, be it on a conference call or be it or generally when they come and talk about their business prospects, I think they've been extremely positive in terms of even their body language and commentary. So the sense one gets here is you can't write off the industrials or the capital goods or the power just on the back of higher valuations. Yes, there will be some pull-offs, which we saw the last 2-3 days. A lot of these companies corrected. But again, as I said, this will more be an opportunity for the next 2-3 years. Yeah, it now depends on your horizon. If you have a 3-month, 6-month horizon, yes, some of this probably could go through a correction. But if you are here for the next 2-3 years, I think most of these companies are going to do well, be it a Siemens or an ABB or a Cummins for that matter, which came out with an extremely positive type of commentary. So most of this, I think, are going to be positive going forward.
Talking about Cummins and the con call, they did talk about double-digit growth and they expect to grow at 2x the GDP rate, which means 15 to 16%, given the fact that the economy is expected to grow at least 7 to 8%. Listen into the management comments earlier in the con call.
Maintain the guidance of our ambition to grow at a minimum of 2x of the GDP, which in this year at a 6.5 to 7 is somewhere between 13 to 14% is what we think we should be able to grow. Our internal aspirations, of course, are to do much better than that. So that's what we are all working on. We have also had this ambition of growing profitably. So we continue to focus on all aspects relating to profitability. So not have growth just for the sake of growth, but continue to do it with healthy profits. And we have been ahead of the curve as far as profits is concerned. So we could, we could see some pressure over there. But overall, all the plans are linked to the growth of the GDP of the country.
Okay, that's the word coming in from the Cummins management. Stock holding up very, very smartly. But Kunal, a couple of these PSUs which are making their move up, right? Everything from an ONGC to a Coal India, they're all looking very smart. Even a BPCL has jumped up quite nicely. And so has BHEL. Any particular stock that you're tracking out of these four?
So I think we were discussing this in the morning that ONGC, Coal India, NTPC, Power Grid, these are the stocks which I would probably believe could make a very strong comeback from the PSU pack. So I think even after today's price action move, some of them, for example, NTPC is a bit muted. GAIL, Coal India, they've done reasonably well. ONGC, of course, is one of the best performers from the PSUs. So I think in that aspect, I would continue to be bullish on these 4-5 large cap names, and expecting that the trend would continue. And the kind of corrections which you've seen in the last 1 week, a 5%, 7% broad correction for these stocks, I think could be taken as a good opportunity to try and build portfolios over here. My belief is that many of these stocks have restarted a very huge uptrend for themselves, and something which is on the scale of the quarterly and the yearly charts for these stocks. So I think you might probably get into a phase where excesses could be built, but whenever those excesses get trimmed off and these stocks come back into short-term mean reversions, etc. points, I think they could be taken as a good buying opportunity from a long term.
Okay, buying Opportunities, is that what you're looking at when it comes to some of the public sector entities? Let's pull up the chart of Reliance Industries and see if the stock is reacting to the commentary coming in from the annual report. Some very interesting comments coming in there. They're talking about how they have managed to consolidate the balance sheet after the previous round of capex, and now the fact that they're ready for the next leg of growth for the company as well. They're looking at exploring multiple technologies for recycling of carbon, which could be a big growth area because decarbonization is a big theme globally as well. They are talking about phased commencement of operations at the solar PV gigafactory, which is anticipated by 2024 end as well. They're looking at commissioning the MJ field, the KJ-D6 block, which accounts for almost 30% of the domestic gas production as well. And they're talking about Jio Bharat Phone, how it's managed to acquire 50% of market share in the sub-1,000 rupee segment as far as the phone hardware is concerned in the country. So a lot of interesting comments coming out of Reliance Industries annual report. We'll keep tracking that for you, but let's take a small break and we'll be right back with more.
Back with closing trades right here in ET now. Aditya Arora as well joins in on the show right now. Aditya, hi, afternoon. What trends are you picking up as the market sees a solid rebound from the Monday crash?
I think markets are rebounding quite strongly, and oil and gas space is doing pretty well. And if I talk about the Nifty and Bank Nifty levels, then I see 51,000 and 51,500 strong resistance for Bank Nifty, and I think one should look to lighten up positions little bit over there because a lot of call writers are active at 51,000 and 51,100, 51,500. So I'm pretty neutral on index right now, and I like Pharma and FMCG space, which is outperforming since quite a while. Yesterday also these two pockets did well, and I think outperformance could continue over here also.
Performance could continue as far as the pharma space is concerned, but just taking stock of some of the other buzzers in the trading session, Tejas Networks, HCL, both from the telecom equipment basket, are fairly active. Ramkrishna Forging, Sterlite Tech, these are some of the other names to watch out for as well. And then Piramal Pharma is perking up. Deepak Fertilizers is doing well in the trading session. Wanted to check what Fusion Micro is up to because it had opened with a gap down. 20% lower circuit is what it was logged at, and that's because the company posted a very, very dismal set of numbers, and there are some on the street who believe that tomorrow could be another down day for the likes of Fusion Micro. The credit cost jumped up to as much as 11.8%. Remember, the guidance for the full year is 3%. There have been cuts to the tune of 70% as far as the estimate is concerned of FY25. JMFL has downgraded the stock. IFL has downgraded the stock. In fact, Devang, what's your view on some of these microfinanciers? Do you think the party is over per se and it's time to turn back? Because there is those strings in the armor which are emerging as far as asset quality is concerned, and they too had to take a large provision. Devang, the question is for you. Devang, you'll have to unmute yourself. Okay, I think we'll try and probably reconnect with him and get the understanding as far as this segment is concerned. But Aditya, what's the view on some of these microfinanciers, Fusion Micro, Poonawalla, Spandana Spurti? Is there a merit to look at any of these names on the charts?
I think all these counters are beaten down since last few days. But they're approaching important support levels. If we talk about Poonawalla FinCorp, then it has approached its important support level multiple times. The stock has taken support at levels of about 340. So if we see a turnaround over here, then I think one can go long. If one has to be level specific, then one can go long on Poonawalla above 356. One must maintain stop loss at 340 and target would be 365 to 375.
Right. In fact, since we're on that subject, also here are what the management of Poonawalla FinCorp had to actually say. Stand corrected at that. Fusion Finance, after their numbers and the kind of miss that they had, remember from the word go, the stock has been gapped down and locked in lower circuit. So let's hear out the management.
We remain watchful of the situation on ground and remain hopeful for improvement of performance in Q2. We expect to bounce back to normal business performance expected from us from Q3 of financial year 24-25, with both our initiatives and industry level steps start yielding results. We are calibrating our disbursement in line with the portfolio risk assessment. We have stopped fresh disbursements in 104 branches. We are further tightening our customer onboarding criteria. Our incentive structures have been revamped with more alignment with collections. The higher than usual slippage in our portfolio quality towards the later part of June led to increase our steady state credit cost to around 1.28%. We will continue to work on optimizing our cost of funds. We expect to maintain the cost of fund or marginal cost of fund at the similar level.
Okay, that's the word coming in from Devesh Sachdev from Fusion Microfinance. In the meantime, just looking at some of the other movers, and let's just bring up the stock price of Lupin, because that, after a strong set of numbers, has been holding out very steady. Remember, they're poised to launch 20 products now in FY25 in the country. They've seen a good 520 basis points of margin expansion, and the revenue as well has seen an uptick of nearly about 16.5%. That's Lupin in trade for you, holding up 4% as we speak right now. Devang, what are your preferred calls within the pharma pack?
So we actually like a couple of ideas and a couple of segments. So MNC Pharma is one segment where we have been sort of buying a company called Abbott Laboratories since a long time. Now this is again more of a health tech company, right from addressing the thyroid drug, the thyronorm, to across the spectrum. It is present where there is a lot of innovation required. There are not much of a margin compression issues. These are companies. This is a company where margin keeps on generally improving, the sales as well as the profitability keeps on improving. We've liked this stock since long, and we still hold it for a lot of clients, and I think this is something which is very interesting. The second segment again is something very innovative. So it's a very small company, not recommending, but it is in some of our portfolios. A company called Gufic Biosciences, around 3,000-4,000 crores of market cap, but it's more a innovator which gets into sort of new segments, and it's still not present in the US. It's more a domestic as well as some certain other countries where it serves, and the capacity is almost full to serve to the US market, where it will probably develop over the longer term period. But both these companies are excellent in terms of their ROE, ROCs. Both these companies are extremely low on debt, and Abbott, which I talked about, is a negative working capital cycle type of company. So yeah, we like this type of core businesses rather than getting into anything which is more adventurous or which is more sort of riskier in the current environment.
And thanks, Devang, for making time and speaking with us today. So that's a view on some of the pharma names that he likes at this point of time. But what's happening in general insurance, because the non-life insurance data was out. Let me take it across to Anurag to get a sense as to how the numbers stack up. Anurag, which company posted better than expected numbers? What was the overall trend like?
In month of July, in non-life insurance sector has shown a growth of 8.17% only. We have seen so many months where the non-life industry has shown a growth of double-digit growth, but in month of July it's only 8.17%. If we talk about the premium, then premium has reached to the gone to the 27,941 crore from last year's 25,821 crore. Standalone health insurance companies have gained by 23%, and the listed player Star Health premium has gone up by 15.5%. Another listed companies, New India, the biggest player, the market leader. So New India Assurance has shown a growth of 9.3%. The premium has reached to mark of 3,557 crore from last year 3,254 crore. ICICI Lombard has shown a double-digit growth, 15.74% in month of July. Go Digit, the new entrant, newly listed player, has shown a premium growth of 7.83%. And if we talk about up to the month of July, means for this financial, starting from April to July, then ICICI Lombard has shown a growth of 19%, New India only 4.37%, and Star Health shown a growth of 17%. And up to the month of July, overall non-life industry has shown a growth of 10.69%.
Right. Okay, on that note, let's take a very quick break. Come right back. We'll continue tracking markets on the other side.
Welcome back. Well, the market is pretty steady, so let's welcome on board the management of Lupin to discuss their numbers because it was quite a strong show led by the India branded business as well. Ms. Vinita Gupta, the CEO, Nilesh Gupta, the MD, as well as Ramesh Swaminathan, Executive Director and Chief Financial Officer, is with us on the show right now. Thank you everyone for making time and speaking with us. Vinita, let me begin by asking you the US performance. How much was it driven by the latest drug launch that you have done? And even with respect to Spiriva, the generic version of that, were you happy with the kind of performance or it undershot your expectations a bit?
So very stable inline business, continued performance on Spiriva and albuterol. So sustained share, 30% share of Spiriva, generic, tiotropium, continued performance of albuterol, as well as good new product launch performance with mirabegron as well as doxycycline.
Right. Vinita, so for albuterol, how is it that you see it shaping up in the coming quarters, given the incremental competition which is now coming in from others like Amphastar as well as Amneal?
Right now, it's performed extremely well. We haven't seen additional competitors get in as of yet, and there is also an IP situation with the competitors. Teva has brought claims against both Amneal as well as Amphastar on their IP on the device. So it's not clear when the additional competitors get in. But at this point, albuterol continues to deliver very well, it has delivered extremely well during the quarter and has continued in the last couple of months.
Sustained market share around 30% for albuterol, etc. But what are the other niche and limited competition launches which are lined up for the next few months and even in FY26?
So in FY25, of course, we ramp up mirabegron. We have doxycycline. We have Predfort that we just got approval for last week. It's a CGT product, so we hope to have a nice upside from it. We expect to launch material injectables like glucagon, hopefully by the end of this year. So good number of products, to help to grow our business from a new product launch perspective. And then into fiscal year 26, we have material products like tolvaptan that we recently got positive, outcome from litigation just last week. We're getting ready to launch tolvaptan April next year, and then have other products like liraglutide, Victoza and Saxenda products that we would expect to launch mid-calendar next year that would contribute to fiscal year 26, as well as Risperdal Consta out of a Nanomi facility that we filed a couple of quarters ago. We've had a recent FDA inspection, which was fairly positive. So we would expect by mid next year to also get approved with that product. So we would expect material contribution from products like tolvaptan, which of course being a pretty large product and the 6-month exclusivity will contribute well into fiscal year 26, as well as our injectable products ramping up with the new product launches, as well as continued delivery of our respiratory products.
Nilesh, I want to get you in on the conversation here. All that Vinita talked about just now in terms of new launches. Give us an outlook for the same, what the timeline could be, what the revenue recognition and the size of the market is.
Etanercept in the developed markets, we launched first in Japan, Europe, and Canada all put together. I think it will be between $25 to $30 million.
Right. And Nilesh, talking about the India growth as well, which was better than most estimates, what according to you has driven this and how sustainable does it seem?
As we reported, our India business grew at 18%, but the IRF business, and so the formulation business in India grew by 10.5%. So I think 10.5% is the real number to focus on here. The difference between 10.5% and 18% was that we had a lot more institutional business sales within India in the quarter. We are all in on India. I think we have close to 10,000 representatives, 10,000 field force, about 7,500 representatives. We have a great portfolio. As you know, chronic as a part of our overall portfolio is 60%, the highest amongst our peers, and that's been our growth story, and certainly something that we're going to focus on as well. If you see our key therapy areas, diabetes, cardio, respiratory, these are all extremely progressive areas, and we're doing well on these. So if you look at cardio, the market grew at 12%, we grew at 18%. If you look at respiratory, market was very slow, 1.6%, we grew at 6.5%. Diabetes, we are growing slower than the market, and that's because of the in-license portfolio that we have within diabetes. Minus the in-license portfolio, our growth was actually 13.8% in diabetes as well. So as you would know, we have talked about growing at 20 to 30% ahead of the market. We're quite on track with that. So the market we expect would grow at high single digits. So we would aspire to grow at double digit for the foreseeable future.
Sure. Nilesh, and also specifically on the India business, could you help us with the breakup in terms of what the price growth was, what the volume growth is, and also if you can help us understand the rationale behind carving out the trade generics division?
So the volume growth was actually 5%. Price growth was 3.5%, and new products added another 2% to the total growth number. These are obviously internal numbers. As far as the trade generic spin out is concerned, that is we certainly don't expect a large portion of the market to go that way, but we believe that is an area of growth for the market as well as for the company. But it requires a lot of agility and focus, and that was the main reason for us to spin it out into a separate entity. It has a completely separate structure that is driving it, and I think that would be the way to grow it while we focus on the main focus area, which is the prescription business in India.
Okay, point taken, Ramesh, as far as the India business is concerned. But any M&A plans that you have further? Because you're looking at a very good sweet spot right now in terms of how your operations are stacking up. Maybe an opportunity down the line?
So we've just turned cash surplus, this particular quarter. So we certainly had the wherewithal to go in for acquisitions if it came to that. And we are an acquisitive company. We are in fact looking around for good acquisition propositions in India for sure, and other parts of the globe where it could potentially be bolt-ons, but small albeit. But for sure, specialty is of great interest to us, and Vinita could speak a lot more about it. So, but clearly, we are acquisitive, and we would like to certainly, raise debt if it came to, because we believe that return on equity could certainly be enhanced if we were to, have debt on our balance sheet.
Right, all of you, thank you so much for highlighting what the quarterly performance has been like, and more importantly, touching upon what the visibility going forward is. Vinita, Nilesh, as well as Ramesh, good to have you guys on board with us. That's Lupin standing up still, strong, 1994 is where the stock is. But let's try and understand what really does this Bangladesh unrest mean for Indian companies, and and whether or not this could be, an opportunity, so to speak, or not. So let me now welcome on board Sudhir Dhingra, MD at Orient Craft, joining in on the show right now. Mr. Dhingra, great to have you on the show. Help us understand how is it that you are mapping the situation in Bangladesh right now, and what really could it spell out for Indian textile players?
Thank you, ma'am, for having me on. Whilst you see, from the human side, one feels very bad for whatever is happening, but with the turmoil that's going on, with everything being disrupted, and there's a lot of anxiety that is coming into the minds of the buying community across the world. In the textile world, when we look at Bangladesh, is predominantly an export-oriented economy. They don't have that much of a local consumption. with they've been growing very rapidly over the last few years. In fact, they've crossed 45 billion last year, and they're targeting 50. And their long-term goal was $100 billion, which is exceptionally good. But India has been lagging behind for the last many, many years, and we've been stuck around 15, 16 billion. And I think something like this is going to open a great opportunity for Indian manufacturers. Although there'll be other countries also vying for the same, but it's a huge opportunity for two angles. One is that the textile and predominantly apparel is a very, very labor-intensive sector. It employs almost 32 times the number of people than any other industry. Irrespective of any kind of automation, we still require almost 2.5 to 3 people directly in every factory for every sewing station, and an equal number outside the supply chain. So while we look at it today, I think India employs about 4.5 or 5 crore people into the textile and predominantly apparel. Now, we are stuck at 16 and they're at 45. I think they will lose substantial amount of their business. Depends who will gain. Now, I think India has everything, every possibility to do things, but there are certain things that we will have to react very quickly, because this is a very time-bound business. And once the customer moves from one destination to another, then he usually stays there. So I see this as a great opportunity to grow jobs, and which we desperately need. And especially for the sector, which is, let's say, women or people who are not educated, we can train most of the people in less than 90 days and make them employable. So this is a huge opportunity if we can take it on.
Yeah, it's a huge opportunity, but somehow India has not been able to capitalize on that. But Mr. Dhingra, if I had to understand, because there are some people that told us that this is perhaps very transient in nature, it wouldn't lead to a China +1 kind of movement as Bangladesh .1 perhaps that Street is anticipating, because this is a very important industry for them, and maybe in a week's time or 2 weeks' time things will normalize. Would you agree with that?
I beg to slightly differ. I am not saying that they're suddenly going to lose half their business. But for the conversations that I've had over the last 2 days with several customers, they are very anxious. They are concerned because anything that gets delayed means a huge loss to the customer. And the comfort that they've had over the years is going to wane. Now, how much each one can capture and bring them home is up to us.
So have you had any initial inquiries? Just trying to gauge what
we
would
are
it mean?
having several inquiries.
Yeah.
I cannot name the customers, but we are having several inquiries where the customer are asking us to reserve capacity. And so I'm sure this is across the trade. And if we can provide them the capacity, we should be able to garner a lot of business. And I think it will help the country, especially when I look at even $1 billion of garment export means almost 1 million direct jobs and 1 million jobs in the supply chain. So even if we can get 10, 15, 20% of what they have, that would mean 7, 8, 9 billion. And that would, you can virtually imagine how many million jobs could be created in a matter of a few months.
Point is absolutely taken. Thanks, Mr. Dhingra, for making time and speaking with us. So even if it means that 10% business comes to India, it's anything incremental for us, and that will help and go a long way in terms of job creation. That's the word coming in. For the markets, a bit of an uptick because we managed to scale past the level of 24,300. It continues to be similar names actually that are gaining traction right now. So your ONGC, Coal India continued to be the same. Adani Enterprises, Adani Ports has picked up a bit of a pace. Let's take a look at Reliance as well, whether there's some sort of interest post the commentary coming in from from the annual report. So Infosys is the one which is up 2.5%. HDFC Bank is also doing quite okay. Kunal, would you say that today marks a bit of a reversal and bit of a bottom for the market, and from here on maybe that bull run sort of will resume and the correction would end?
No, I think it's too early to say that, Anisha, because we need to see concrete evidence of resistance has been taken out, and the first resistances which we look out for is at least a 50% of the scale down which the indices have seen. So when you look at the index, the Nifty benchmark Nifty, in that case we've seen a 1100 point odd correction from 25,070-80 approximately towards 23,900 approximately. So I think in that front we would be looking at 24,500 as the first important resistance being taken out. The positive signs are that the market breadth is opening up. So I think that could probably be a very good sign that eventually over the next maybe 1 week or so, the markets could settle into a positive trading range with a bias more tilted towards the overall market breadth. And that could also be one of the another positives, that sectors, you might see sectors starting to get into a uptrending mode. So I think what we need to look out for are two important points. One, in terms of technicals, 24,500 being taken out on the Nifty, that would probably be a very strong indicator that the bull strength is coming back quite strongly and we might see a sustained uptrend. And the second and the most important is sector churns, and I'm assuming that if this trend sustains, where the market breadth opens up for the next couple of days, you might see some decisive sector trends coming up.
Right, let's welcome on board Dipan Mehta as well and chat about what he's making of the market right now. Dipan, once again, a very short-lived correction, Monday meltdown, and now we're practically to where we left it off. How is it that you've dealt with the past 2 days?
Yeah, good afternoon, and thank you for having me on your show. Nothing, just stay put. I think, we have seen such down days being immediately backed by ferocious buying as we have seen today. But let's see, I think, we are in a wait and watch mode at this point of time, sitting on a little bit of cash, expecting a correction, as are so many other professional investors. And we don't know whether this particular correction is over and done with or that it can deepen further. Because, so long as the market doesn't create a fresh new high, the risk always remains that this correction can particularly deepen. So only time will tell. But I think a lot depends upon global markets and FI flows as well. But for the timing, I think as an investor, it's best to stay put and watch out and play out the earnings season and see what the numbers are coming and which are the good ideas which are coming through and which are the misses where one can exit out of them.
Fair enough. Need to stick to quality and keep on doing a bottoms-up analysis. That's the nature of the market right now. Just take stock of what's happening to Jio Financial Services. While we're tracking Reliance Industries on account of the annual report comments coming in, and that stock hasn't reacted, Jio Financial Services actually has. That stock is up 7% right now, 8% as we speak. Dipan, you track this, stock and this group very closely with respect to what's happening to Reliance, the commentary coming in from annual report, and Jio Financial Services. When the stock listed of Jio Financial Services, everybody was saying that it doesn't have a business, not really makes sense to own it right now, but the stock has jumped up materially from there.
Yeah, that's right. And I was also in the camp which said that, we're not that positive on Jio Finance at this point of time, because building such businesses at scale requires time, requires to build a solid team. And for investors to get confidence, it requires the NBFC to go through an actual down cycle, or I would say up cycle in the NPAs, and see how they've actually performed and how their risk management systems, how resilient the risk management systems are. So those have not been tested as yet. So therefore, I just want to wait and watch on Jio Finance. It's easy in India, it's easy to scale up a NBFC business, but the problems start 2-3 years down the line when the corrections start to falter and NPAs start to spike. Whether that happens in Jio Finance, only time will tell. I'm sure they have got robust risk management system. But even some of the bigger groups, like look at the way M&M Finance has played out in terms of when the downturn took place in the NBFC industry and when NPAs started to spike up, that company really suffered. So it's not just the management. A lot of other factors also come into play. So from that point of view, I think it's better to be a bit cautious and go for the tried and tested players like say Bajaj Finance or Chola Investment, which have done exceptionally well. I thought even Sundaram Finance numbers were pretty decent.
Right, interesting. Where else, Dipan, if at all, have you bought in afresh in the market? I mean, a lot of sector churn clearly at play. Banks made an attempt, fell back after their numbers. Pharma clearly seems to be a decisive winner looking at the earnings of a few of them. And then, of course, sporadically, FMCG as well has been trying to hold out.
No, I'm not buying anything just now. As I said, right now it makes sense to be a little bit in cash in your portfolio if there's a correction, and there has to be a correction. Right from 2022, post-COVID, we haven't had a serious correction. By serious, I mean a 10% type of a correction, or maybe even a testing of the 200-day moving average. And at some point of time, it will happen. One can't say how and why and when, but that's a good entry opportunity. For right now, I think if you're 70-80% invested, you're fine. The cash which you hold in your portfolio, 15-20%, 10% is strategic. It'll enable you to buy into good quality businesses when there's a correction, because more often than not, investors do not have cash when there's a correction. When a correction does come, the real quality businesses can drop by 20-30% also. I know you may find it surprising because we haven't seen it, but I've been in the market for 30 years. And I know that even in a bull market, you could have quite a deep correction. And that's what we are waiting for at this point of time.
Waiting for that correction to get done. In the meantime, quickly, Aditya, before we let you go, share with us your BTSC trades.
So I like Sun Pharma right now, which is a bullish candidate. This could be bought at 1734. Stop loss is 1700 and target is 1770 to 1800. Second one is Coal India. This one is also outperforming the market, and there's good strength in this counter. So this could be bought at 530.20. 505 is the stop loss and target is 560 to 600.
Any BTST trades you'd recommend?
So yeah, a couple of buy calls, and my focus would be on ABB. That's a chart which is looking attractive, formed a double bottom today at 7,700 mark, which has been a key support. So keeping a stop loss of 77.50, would recommend a buy with a target of 81.50. And Dr. Reddy is the other stock which I'm expecting in terms of a breakout. The stock has is coming out of a consolidative range at the higher end of the price trajectory, and we've seen pharma stocks doing fairly well. So expecting a breakout for Dr. Reddy, 71.50 as the target, stop loss at 6,800.
Okay, so those are the BTSC trades coming in from our charters at the moment. But let me also look at what the comment was from Prabal Sen regarding ONGC and Oil India, because both of these stocks are doing very well. In fact, ONGC, me and Ajay were discussing, is sitting at a 14-year high level, and it just continues to gain ground. And the brokerages, as Aisha was talking about, are fairly sanguine still. Let's hear out what Prabal had to say about a couple of these OMCs.
Directionally, realizations will look up. Production seems to be reversing its long-term trend of steady decline. And of course, there is obviously some optimism that subsidiaries like HPCL and even OVL can actually continue to add to consolidated earnings. So there's a whole lot of things that are actually now coming together. The street seems to have woken up and developed this newfound belief in their production levels, but it's not something that they have not stated earlier. The asset has already started producing. It's been probably about a couple of quarters that it is steadily delivering 10 to 12,000 barrels a day of oil if you take into account the total production of gas from cluster 1 and cluster 2 in the KG98 block, it is at about 1.5 MMSCMD of gas. So the confidence that is there in terms of delivery of the exit rates that they have spoken about, of getting to around 40,000 barrels of oil per day and getting to about 6 to 7 MMSCMD by this year, and then reaching peak production of around 9 to 10 MMSCMD by next year. I think that confidence does come through a little bit, because there has been a delay in ramp up, but there's no significant technical disappointments from the asset. And I think that is very important.
Well, other than the markets, lots happening on the corporate stable as well, and the much-awaited Tata Curve SUV Coupe has been launched with an introductory starting price of 17.49 lakh rupees ex-showroom. It is the first ever coupe SUV from the manufacturer's stable and will go up against the mid-size SUVs like Hyundai Creta, MG ZS EV, Mahindra XUV 400. So let me take it across to my colleague Srishti and get in some more details on this brand new launch from the Tata Motors stable.
And this is Tata Motors' latest offering because today Tata Motors has launched its Tata Curve, that is SUV coupe, one of its kind because very limited in competition, and what we're going to see is an interesting offering by Tata Motors. It gives you a mixed feel of both SUVs and sedan, and that's what we call as a coupe category. It actually bends down near its roof rails, and this product, what you're going to see, is very attractively priced. The price range starts from 17.5 lakhs and goes up to 21.99 lakhs. It's actually come out with two battery pack options, 45 and 55 kilowatt hours, and the range is also quite good because though the certified range is actually over 500 kilometers, but just to give you a realistic idea, the company did say that between 400 and 430 kilometers in a single charge is what you can expect from Tata Curve SUV. If we talk about some of the other details then the company did say that from 0 to 100 kilometers per hour, this car is one of the fastest in the category, which can be there in less than 9 seconds. And other than that, they also do say that for today, they have launched their EV variant, but in the second half, be ready to watch out for the ICE variants as well. So this is Tata Motors' latest offering, one of its kind, as well as very limited in competition, attractively priced, and the bookings will open on 12th of August.
Okay, point taken. So that's the latest from the stable of Tatas. Dipan, if you're still with us, a lot of launches lined up earlier today. Shrishti was telling us that Bajaj Auto might come up with a couple more just around the festive season. Could that lead to a re-rating of sorts for the entire auto sector?
No, I think they are, in a way, I would say, impacted by the high base of the last 2-3 years. And no doubt, I think monsoons have been good, so that should benefit rural market and all the sales which go to the rural market. But I would be a bit cautious to neutral on automobile at this point of time. There are telltale signs that inventory is building up, discounts are going up, and no doubt new models may drive volumes, but I don't think it's enough this time round. So I feel it's better to just be a little bit cautious as far as automobiles are concerned. We have a new IPO opening that is already open, Ola Electric, and I'm eagerly awaiting its listing. Let's see how that plays out. Maybe a couple of months down the line, it could be an interesting investment idea as well, considering that the future of the automobile industry is in EVs. And in India, I think it's the scooters which will take to EV conversion very, very fast. And Ola, being the market leader, can really surprise a lot of the players over there. So it's a company really worth watching. And we'll be tracking how much progress it makes and trying to figure out a good point where the risk.
Thank you, Deepan, as well as Kunal for joining us on the show today. Let's quickly take a look at what the markets have done in today's trading session. Very good trade, day of trade coming in for Nifty. Up 1.3% is where we have closed. Sensex also more than 1% higher. India VIX, very solid move seeing over here. 14% cool off on this front as well. Nifty Bank also almost 1% higher in today's trading session. Let's quickly just talk about all the newsmakers today, and let's pull up the chart of Cummins India, very good earnings coming in. Let's also pull up Venky's because profit has gone up by more than 3 times. That stock was locked up in upper circuit, 20% up there. On the flip side, let's talk about a lower circuit candidate today, and that was Fusion Micro. Very poor set of Q1 numbers coming in, and that stock will be up for you as well. There you have it, 20% lock-in coming in for Fusion Micro as well. Lots of other newsmakers to talk about. Top Nifty gainer today, ONGC, up almost 7%. In fact, more than that on the back of multiple upbeat brokerage notes coming in, and also lots of other sectors to look out for. You had Sangvi Motors, also good numbers coming in. That stock also did pretty well, in fact, but there was some margin shrinking seen. So 12.5%, pardon me, that stock is lower. Cummins, like I mentioned, good commentary coming in. Overall, good day coming in for the markets, and Nifty recovery of 1.3% on Nifty, and that's where we have closed for the day, above 24,300.